What's up guys, this is Teddy. Welcome to my YouTube channel. In this video I'm going to be talking about real estate agent taxes and more specifically how they kind of work for somebody that's brand new to real estate and brand new to being their own boss. So this video isn't going to be about the newest tax deduction that's going to save you money, and it's not going to be about how to set up some type of offshore bank account. These are just going to be tried and true ways that any real estate agent can use in order to lessen the likelihood that they're going to have to pay more in taxes than they should. So the first thing that you have to do is you kind of just have to realize the concept behind being taxed as a small business owner as opposed to an employer. When you worked for an employer before, you probably received a paycheck, and say if you got $1,000 paycheck, you could literally go out and spend all of that money at one time and you wouldn't have to worry about taxes because your employer already paid your taxes for you. As a small business owner or as a real estate agent, that is 100% not the case. And the pros of this are you can actually pay a lot less in taxes being a small business owner, but it's very difficult to get over the learning curve of being a small business owner or a real estate agent. When you receive a commission check from a house sale, you almost have to look at that commission check as not going to be what you're going to end up paying. Like 15 to 20% of that paycheck is going to have to be paid to the government at tax season. And you don't want to be the person who overspends and has to end up paying $10,000 in taxes later and you don't have the money. So the first tip that I'm going to give anybody is you want to calculate a rough estimate of how much taxes that you're going to be paying during tax season. You do this by pulling out what's called a tax bracket. A tax bracket is literally the framework for what the government uses to see how much of that income that you receive is going to be taxed. So in my case, my first year of real estate was really bad. I only made $5,000 in my first year. And if you pull out a tax bracket, which you can find on Google very easily by just typing in tax bracket, you'll realize that I was only taxed at around 10% of that income. So $5,000 is roughly equal to $500. That means I had a $500 tax liability. Now, tax liability is way different from the actual income that you're going to be taxed at, because as a small business owner, this brings me to my next point, you have what's called deductions and credits. Deductions and credits are basically expenses that you can use to subtract away from your tax liability. Deductions and credits are very confusing, so like I said, it's best to let a tax professional handle those, but just realize that deductions and credits are something that you're going to have to study, and there's plenty of books about this topic. So let's say that I had a $500 tax liability for my first year of real estate. With that income, I'm pretty much going to be able to wipe out all my taxes through deductions and credits. So I had a $1,000 tax deduction for my expenses in my business. That's pretty much going to put my taxes at zero. And you can kind of see the correlation here. You use your expenses from your business like advertising, gas mileage, home office deductions, and all these other miscellaneous deductions to try and offset your tax liability. And if you do a really good job keeping up with your expenses, you can reduce your taxes a lot. This brings me to my third tip, and this is something that took me a very long time to figure out, is that you don't want to use all your expenses on the same card. You want to get a specific credit card for all of your expenses so that you can easily keep track of it and use it as deductions towards your tax liability. When I first started real estate, I didn't do that, and I had to go through at the end of the year and go through all of my expenses so that I could use them as my tax deductions. Now I just have everything on a credit card. I have all my MLS fees, I have all my advertising, all my Google AdSense, my Facebook ads, and I have them on a single credit card so that when I do go to talk to my tax guy, it's all laid out right there and I can easily go through and I don't miss any deductions. This brings me to my fourth tip, is that you want to choose a very competent tax person. The first time that I did my taxes was a total nightmare. I don't really know if this person was just didn't like their job or was really disinterested, but I left a lot of money on the table because this person didn't really work with me to understand my situation. Using the wrong tax advisor could really cost you a lot of money, so you want to interview the best tax advisor for your money. There's all different types of tax advisors. You have people who will help you set up an offshore bank account and do all this sketchy stuff, but they're going to cost you a lot of money and they may get you in trouble. And then you have people like the situation that I had that are just disinterested and don't help you at all. You want to choose a tax advisor who is aggressive but not doing things that are illegal. And you ask a tax advisor or an accountant if they have specific skill sets towards real estate investors or real estate agents. A lot of times these people will be in the same boat, and having that tax advisor who knows all these strategies to reduce your tax liability to the fullest extent is going to save you a lot of money. Anyway, that's my video for today. If you guys like this video, make sure to hit that subscribe button down below. Make sure to give it a like, and as always, thank you for watching.